What's good, my people? So today let's talk about order blocks. We talked about market structure, shift and change of character on the last video. So we are going to look at order blocks on this video for you to know when to see where to identify order blocks at this time of and these markets. You will notice that we are on a 1 hour time frame, and I will want to start by showing you the order blocks that I can see visibly on a 1 hour time frame, and we'll be dropping down to the lower time frames to show you how you can use order blocks to get into your trades and to put stop loss on your trades. So we can first start by looking at these. For recent trade, this is the order block that we saw, and this was on Friday's trade. The market rallied up. This order block did its work. The work of order blocks is to resist the price from going further up on a certain direction or further to if it's violated, it shows the market structure shift. So this is the first order block that you can see visibly, and on bigger time frames there are usually less order blocks that are meaningful. This is another order block that I can see visibly here. This is the last candle before this downward movement, and as you can see, it does the work very well. And this is another order block that is visible here, and this is another order block that is visible here. These are the examples of order blocks that are visible on a 1 hour time frame. And we can look at this is an order block that has been violated to the upper side, but with this sign, I take this as a sign that if the market usually violates an order block, this is a middle order block. Middle order blocks are usually violated. The upper ones, like these ones, if are violated, means that the market has changed its direction and you can expect these highs to be taken out. But you can see this was left out, since there's another block here, and with this low movement here, retracement, this graduated to be an order block, resisting this price and initiating this downward movement down here. And as you can see, this is the middle order block here. As you can see, it was violated to the upper side and the market broke its low, meaning that the market is still going down. With this retracement here, you can put your stop loss here, as long as you don't have your stop loss doesn't have the range that usually brokers provide. If it's here, it will be taken out, but if you place it here, you will be successful and you will get to see this order block. Middle order blocks are usually violated to the upper side, but when the market breaks its low, it's a nice indication that the market is going to take out this low, and you can see the move happened there very beautifully. And with that, we can drop down to the 5-minute time frame and look the order blocks that are available. And these we can look at these low moves here, and you'll notice that after these have been violated, and this the last candle before that initiated this move, we can treat this as an order block. Let us look at the order blocks that are on the market previously on the 5-minute time frame that we can use. You will notice that this was violated to the upper side. This is categorized as the middle order block. This is the order block of the 1 hour that we used. We highlighted here. So this is the order block that we can look at. And as you can see, we can refine it further. You notice that this green candle, the last green candle before this downward movement, you see there is no any candle that has come to violate its high, but you can see the market rallied up, break market structure, it broke down, change of character, and you can be putting your buy here, putting a stop loss here, and you can aim for these lows here and here. And as you can see, there's a minimal retracement here. Even this one has acted as an order block, but you can see it hasn't been violated till even this side here. It was respected and initiated this downward movement. This is the 5 minutes order blocks that we usually use for us. As you can see here, you will notice this one, and if this retracement happen, you will be looking at this order block. Don't look at this one. You can look at this one to wait for the market structure shift to happen for you to enter. And as you can see here, the market structure shift happened, changing its direction to downward direction, and you can be placing your nice order here, a nice buy, a nice short position here. After this retracement, going to it usually retraces to a fair value gap here, and as you can see, the fair value gap was retraced at the lower side. You can place your order there, putting your stop loss at the high of that order block and aiming at this low here. And as you can see, the market just reached at that low with minimal resistance and with less than 1 hour trade. And as you can see, that's how we usually use order blocks to look at our markets and get into some moves. And if you want to this strategy to be refined, there usually a lot of strategies. You can develop your own strategy for you to enter the markets, but with order blocks, we usually use them generally like that. Most traders usually use them like that. I haven't seen another video of another trader using another block in a weird scenario, but with this, most traders usually use order blocks in that manner. And with that, let us meet on the next video. Goodbye, guys.